If you're 65 or older in Canada, there is a very good chance you're already receiving at least one government benefit. Maybe it's CPP, maybe it's OAS, maybe you're also receiving GIS. But here's the part many seniors don't realize. Getting one government benefit does not automatically mean you're receiving every other benefit or support you may qualify for. And in 2026, that matters more than ever. The government has changed the name and structure of one major low-income benefit. The Canada Groceries and Essentials Benefit has replaced the GST/HST credit. OAS payments have been adjusted for inflation, and programs such as the Canadian Dental Care Plan and Home Accessibility Tax Credit can provide valuable support depending on your circumstances. Some of these programs are direct payments. Others reduce your taxes or help cover specific costs. And some are easy to miss because they don't arrive in the same way as CPP or OAS. So today, we're going through 6 benefits and government supports that Canadian seniors should know about. And stay with me because number 6 is particularly important for seniors who continue working after they start receiving CPP. Many people don't realize that continuing to work can actually lead to an additional CPP benefit. Let's get into it. And if you want straightforward information about Canadian seniors' benefits, CPP, OAS, GIS, and retirement programs without confusing government language, subscribe to the channel and turn on notifications. That way you can stay informed when important changes happen. The first thing to understand is that the Canadian retirement system isn't just one program. It's a collection of different programs administered by different departments and agencies with different eligibility rules. CPP is one thing, OAS is another, GIS is another. The Canada Groceries and Essentials Benefit is administered through the CRA. The Canadian Dental Care Plan has its own eligibility rules. And the Home Accessibility Tax Credit is not a monthly benefit at all. It's a tax credit. That difference is important. A senior might think, I'm already getting CPP and OAS, so I'm probably receiving everything available to me. But that assumption can be costly. Some programs depend on your income. Some depend on your marital status. Some depend on whether you have private insurance. Some depend on whether you filed your tax return. And some depend on whether you are still working. That's why today's video isn't about promising that every senior will qualify for all 6. You won't. Instead, the goal is to help you recognize which programs deserve a closer look. Think of this as a benefits checkup. You hear about a program, compare its basic eligibility rules with your own situation, and then verify your eligibility through the official government source. That last step is extremely important. Government benefits can change, and your personal circumstances can affect the result. So let's start with one of the most important benefits for Canadians 65 and older. The first benefit is old age security, commonly called OAS. OAS is different from CPP. CPP is based largely on your contributions to the Canada Pension Plan during your working years. OAS is a federal pension designed around age and residence requirements rather than your CPP contribution history. That distinction is easy to overlook. You can qualify for OAS even if you have never worked in Canada, provided you meet the applicable eligibility requirements. The Government of Canada specifically states that people aged 65 and older should apply for OAS even if they have never worked or are still working. For many seniors, OAS becomes one of the basic building blocks of retirement income. But here's where things become more interesting. The amount you receive isn't simply one universal number for every senior. Your OAS entitlement can depend on factors including your age, how long you've lived in Canada after age 18, and your income. And OAS amounts are adjusted periodically based on the Consumer Price Index. For July through September 2026, the Government of Canada says OAS benefits increased by 1.2% compared with the previous quarter, representing a 2.3% increase over the previous year. That means seniors shouldn't assume the amount they received several months ago will remain exactly the same forever. The government reviews OAS amounts in January, April, July, and October based on changes in the cost of living. There's another detail many seniors overlook. OAS can be affected by income at higher income levels through the OAS recovery tax, sometimes called the OAS clawback. So if your income changes significantly, you should understand how that could affect your OAS. And this is especially important for seniors who continue working, sell investments, receive other pension income, or experience a large taxable income increase. The practical lesson is simple. Don't just look at your bank deposit, look at your overall retirement income picture. Know what your OAS amount is, know what factors affect it, and make sure your personal information and tax information are accurate. And remember, OAS is only the beginning. Because for lower income seniors, there is another benefit that can be far more significant. The second benefit is the Guaranteed Income Supplement, or GIS. This is one of the most important programs for lower income seniors in Canada. GIS provides additional monthly income to eligible seniors who receive OAS and meet the income requirements. According to the Government of Canada, you generally need to be at least 65, receive OAS, live in Canada, and have income below the applicable threshold. And here's why GIS deserves special attention. Two seniors could both receive OAS, but have very different total monthly incomes because one qualifies for GIS and the other doesn't. For July through September 2026, the government lists a maximum GIS payment of up to $1,123.17 per month for a single, divorced, or widowed senior whose annual income is below the applicable threshold, but don't hear that number and assume everyone receives it. The maximum is not guaranteed. The actual amount depends on circumstances, including marital status and income. For example, the government lists different income thresholds depending on whether you're single, whether your spouse receives OAS, whether your spouse receives the allowance, or whether your spouse does not receive OAS or the allowance. And this is where a major mistake can happen. A senior's income can change. Maybe you retired recently. Maybe your employment income disappeared. Maybe a private pension was reduced. Maybe your spouse's financial situation changed. Maybe investment income is lower than it was the previous year. If your income is lower this year than it was last year because of retirement or another significant change, the government says you should contact them because your benefit may potentially be established using an estimate of your current year income, rather than simply relying on the previous year's figure. That's a detail many people don't know. So if you've recently retired and your income has dropped substantially, don't simply assume your previous year's income tells the entire story. Check your situation. And there's another important point. GIS is not something you should think of as a permanent amount. Your circumstances matter. Your marital status matters. Your income matters. And tax filing matters. So if you're receiving GIS, make sure your tax information is kept current and pay attention to correspondence from the government. But now let's move to a benefit that changed in a very visible way in 2026. If you've heard people talking about the GST/HST credit in the past, you should know about the Canada Groceries and Essentials Benefit. As of July 2026, the Canada Groceries and Essentials Benefit, or CGEB, replaced the GST/HST credit. The CRA says the eligibility, payment calculation, and basic structure remain the same, but the benefit was increased by 25% for 5 years beginning in July 2026. This is especially relevant to low and modest income seniors. Why? Because this isn't a senior-only benefit. You don't qualify simply because you're 65. Instead, eligibility is based largely on factors such as residency, marital status, and income. And here's something very important. You are generally considered automatically when you file your tax return. The CRA says that when you file your taxes, you're automatically considered for the Canada Groceries and Essentials Benefit and related provincial and territorial programs. That makes tax filing incredibly important. Some seniors think, I don't owe any tax, so I don't need to file. That can be a mistake. Even if you have very little taxable income or don't expect to pay income tax, filing your return can help the government determine eligibility for benefits and credits. For the July 2026 to June 2027 payment period, the CRA says the CGEB is based on information from your 2025 tax return and the benefit is paid quarterly. The CRA's current information says the maximum annual amount for the 2025 base year can be up to $679 for a single person and up to $890 for a couple, with additional amounts for eligible children. But again, don't assume you will receive the maximum. Your actual payment depends on your circumstances and income. The important point is that a senior could be overlooking this support simply because they think that's the old GST credit and I don't qualify. The program has changed, the name has changed, the payment structure has been enhanced, and if you are a lower income senior, it's worth checking. There's another reason this benefit is interesting in 2026. The government also issued a one-time top-up connected to the transition from the GST/HST credit to the new benefit. So if you were eligible for the applicable GST/HST credit payment, you may have seen that payment separately. This is a good example of why seniors should be careful with outdated information. A video, article, or social media post from several years ago may tell you about the GST/HST credit, while current government information now calls it the Canada Groceries and Essentials Benefit. Always verify the current name and rules. And now we're moving into a completely different kind of support, because the next program isn't about groceries, it's about your dental care. The fourth benefit is the Canadian Dental Care Plan, or CDCP. For seniors, this is one of the most important programs to check because dental expenses can become a significant retirement cost. The CDCP is designed for eligible Canadian residents who do not have access to dental insurance and whose adjusted family net income is below $90,000. The government also requires Canadian tax residency and tax filing so family income can be assessed. For seniors 65 and older, the program has already expanded beyond its initial launch phases. Eligible seniors can apply, provided they meet the program's requirements. But there's a common misunderstanding. Being 65 does not automatically mean you receive free dental care. The CDCP has eligibility conditions. One of the biggest is whether you have access to dental insurance. If you have private dental coverage available through an employer, pension, or another source, that can affect your eligibility. Your family income also matters. And then there is another issue. Even if you're enrolled in the plan, not every dental expense necessarily means you pay nothing. The plan has its own coverage rules, reimbursement arrangements, established fees, and potential patient charges. That's why seniors should ask questions before receiving treatment. The Government of Canada advises CDCP clients to check whether an oral health provider participates in the plan before booking an appointment. This is particularly important for seniors who need dentures, major dental work, or ongoing treatment. Don't assume that because a dental office accepts government patients, every service will automatically be fully covered. Ask what is covered. Ask whether there could be an additional charge. Ask whether pre-authorization is required for the treatment you're considering, and confirm your coverage before the appointment. This could prevent a very unpleasant surprise on the bill. Another important point is that the CDCP is not the same as a monthly retirement benefit. It is a health-related support program. So when you make your personal retirement benefits checklist, don't only look at cash deposits. Look at expenses that the government may help reduce. That is a broader way to think about retirement planning. And now we're going to look at a benefit that could be particularly useful if you've modified your home. The fifth support is the Home Accessibility Tax Credit, or HATC. This one is very easy to overlook because it doesn't show up as a monthly payment. Instead, it works through your income tax return. The Home Accessibility Tax Credit can apply to eligible renovations or alterations that improve accessibility, mobility, functionality, or safety in an eligible home. And seniors are specifically included. The Canada Revenue Agency says a qualifying individual can be someone who is 65 or older at the end of the tax year, or someone eligible for the disability tax credit. The federal tax expenditure information describes the credit as applying to up to $20,000 of eligible renovation or alteration expenses per calendar year, subject to the program's rules. Imagine a senior who modifies a bathroom to improve accessibility, or installs certain features that make it easier and safer to move around the home, or completes another eligible renovation designed to improve safety, accessibility, or functionality. The important question isn't simply, did I renovate my house? The question is, was the renovation eligible under the tax credit rules? That's a very different question. And because this is a tax credit, you also need to understand that it is not the same thing as receiving a check for the entire renovation cost. It reduces tax according to the rules of the credit. That distinction is important when budgeting. There's also a recent change seniors should know about. For 2026 and later tax years, the government has proposed rules affecting situations where the same expense could potentially qualify under both the medical expense tax credit and the home accessibility tax credit. That means seniors doing major accessibility renovations should keep detailed records and carefully review which tax treatment applies. Keep your invoices, keep receipts, keep contracts, keep proof of payment, and keep documentation explaining what work was completed. If you're unsure whether an expense qualifies, ask a qualified tax professional or check the CRA's current guidance rather than assuming. Because the biggest mistake with tax credits is often discovering the rules after the renovation is already finished. And now we've reached number 6. This one is especially interesting if you're 65 receiving CPP and still working. The sixth support is the CPP Post-Retirement Benefit, often called the PRB. This applies to a specific group of Canadians. If you're under 70, receiving your CPP retirement pension, and you continue working and contributing to CPP, those contributions can create a post-retirement benefit. The government explains that people under 70 who are working while receiving CPP can continue contributing, which can increase their pension through the post-retirement benefit. This is particularly relevant because the traditional image of retirement is changing. Not everyone stops working completely at 65. Some seniors work part-time, some continue consulting. Some operate a small business. Others simply want to remain active in the workforce. If you're in that situation, don't assume your CPP story ended the day you started receiving your pension. There can be additional CPP consequences from continued contributions. But there's an important detail. You don't continue building the PRB forever. CPP contributions generally stop when you reach age 70. So the window matters, and your individual circumstances matter too. This is not a reason to work simply to get another benefit. It's a reason to understand what happens to your CPP when you continue working. If you're 65, 66, 67, 68, or 69 and still working while receiving CPP, check your CPP information and understand whether you are contributing and how those contributions may affect your future benefit. And this is also a reminder that retirement doesn't necessarily mean all government benefits are finished. Your benefits can interact with what you're doing today. Income, work, taxes, marital status, age, and health-related expenses can all change the picture. So who should really pay attention to these 6 programs? First, low-income seniors. If your retirement income is limited, don't assume CPP and OAS are the end of the story. GIS and the Canada Groceries and Essentials Benefit may deserve particular attention. Second, seniors who recently retired. Your income today may be dramatically different from your income last year. That can matter for income-tested programs. Third, seniors who live alone or have recently become widowed or divorced. Changes in marital status can affect benefit calculations. GIS, for example, has different rules depending on your family situation. Fourth, seniors without private dental insurance. If you're paying for dental care yourself, the CDCP may be worth checking if you meet the income and other eligibility requirements. Fifth, seniors who have completed accessibility renovations. If you've spent significant money modifying your home, don't throw away the receipts. The home accessibility tax credit may be relevant depending on the renovation and your circumstances. And sixth, seniors who continue working while receiving CPP. Those Canadians should understand the post-retirement benefit, but there's a bigger lesson here. You should not wait until you have a financial problem before reviewing your benefits. A benefits checkup should be part of your normal retirement routine. Let's talk about timing. One of the biggest mistakes seniors make is thinking that government benefits are completely static. They're not. OAS and GIS payment amounts can be adjusted periodically. For the July to September 2026 quarter, OAS benefits were increased based on changes in the Consumer Price Index. The Canada Groceries and Essentials Benefit is also operating under its new 2026 structure. The CRA says the benefit replaced the GST/HST credit in July 2026 and is paid quarterly. And the amount for the current payment period is based on your 2025 tax information. That makes one thing extremely important. File your taxes, even if you don't owe money, even if your income is mostly pension income, even if you think you won't qualify. Your tax return can be used to determine eligibility for multiple benefits and credits. Another important rule is to keep your personal information accurate. If you move, separate, marry, become widowed, or experience another major change, don't assume every agency will automatically know exactly what happened. Check your information, review your government accounts, read benefit notices, and don't ignore letters simply because they look like routine government correspondence. Sometimes the most important information is buried in what looks like an ordinary notice. Now let's go through some mistakes that can quietly cost seniors money or create unnecessary problems. The first mistake is assuming that being 65 automatically qualifies you for every senior benefit. It doesn't. Age is only one factor. Income, residency, marital status, insurance coverage, tax filing, and other requirements can matter. The second mistake is assuming that if you don't pay income tax, you don't need to file a tax return. That can be dangerous because several benefit programs use information from your tax return. The third mistake is using outdated information. This is especially relevant in 2026 because the GST/HST credit has been replaced by the Canada Groceries and Essentials Benefit. If you're researching benefits online, check the date of the information. The fourth mistake is looking only at monthly deposits. Some supports aren't monthly payments. The Home Accessibility Tax Credit, for example, is handled through the tax system. The Canadian Dental Care Plan helps with eligible dental costs rather than functioning as a normal pension deposit. The fifth mistake is ignoring changes in income. If your income drops significantly after retirement, don't assume your previous year's income tells the entire story. GIS rules can take income into account, and the government provides a process for situations where current year income has fallen due to retirement or other circumstances. The sixth mistake is failing to keep receipts. If you're claiming a tax credit connected to home accessibility expenses, documentation matters. And the seventh mistake is trusting anyone who promises you guaranteed government money. There is no legitimate shortcut where someone can guarantee that you'll receive a specific benefit without checking your circumstances. Be especially careful if someone asks you to pay money just to unlock a government benefit. Use official Government of Canada and CRA resources first. So what should you actually do after watching this video? Start with your tax return. Make sure your most recent return has been filed and that your personal information is accurate. Then look at your current retirement income. Write down your CPP, write down your OAS. If applicable, write down your GIS. Then consider other income, including employment income, private pensions, investment income, and other taxable sources. Next, check your marital status and make sure government records reflect your current situation. Then review your dental coverage. If you don't have access to private dental insurance and your family income is within the CDCP requirements, investigate whether you may qualify. After that, think about your home. Have you paid for accessibility-related renovations? If so, gather the paperwork before tax season. And finally, if you're still working while receiving CPP and you're under 70, review how your continued CPP contributions work and whether the post-retirement benefit applies to you. You don't need to solve everything in one afternoon. The point is to create a simple benefits review, one program at a time, one document at a time, one question at a time. And if you discover that you may qualify for something, verify it through the official government source before making any financial decision. Before we finish, if this information has been useful, take a moment to subscribe. This channel is focused on practical information for Canadian seniors, retirees, and anyone trying to understand CPP, OAS, GIS, and government benefit programs. And if you know another senior who might benefit from this information, consider sharing the video with them. Sometimes the person who needs this information isn't the person searching for it. It might be a parent, a grandparent, a neighbor, or a friend who assumes they're already receiving everything they're entitled to. Let's step back for a moment. The most important lesson isn't that there are 6 programs. The important lesson is that retirement income in Canada is made up of multiple pieces. For some seniors, CPP may be the major piece. For others, OAS may be more important. For lower income seniors, GIS can make a major difference. The Canada Groceries and Essentials Benefit can provide additional support for eligible low and modest income Canadians. The Canadian Dental Care Plan can potentially reduce certain dental costs for eligible people without access to dental insurance. The Home Accessibility Tax Credit can help eligible seniors through the tax system when qualifying accessibility renovations are made. And for seniors who continue working while receiving CPP and are under 70, the post-retirement benefit can be another piece of the retirement income puzzle. But don't think of these as 6 guaranteed checks. That's not what they are. They're 6 programs or supports worth understanding. Your eligibility is personal, your income is personal, your family situation is personal, and your tax situation is personal. That's why the goal of this video is not to tell you, you will get this much money. The goal is to help you ask the right questions. Am I receiving OAS? Am I eligible for GIS? Am I being assessed for the Canada Groceries and Essentials Benefit? Do I meet the requirements for the Canadian Dental Care Plan? Have I overlooked a home accessibility tax credit claim? And if I'm still working while receiving CPP, am I building a post-retirement benefit? Those are much better questions to ask than simply, how much should a senior get? Section 14, Final Takeaways. Let's quickly bring everything together. If you're 65 or older in Canada, don't assume your retirement benefits begin and end with CPP and OAS. First, understand your OAS, and remember that OAS amounts are periodically adjusted for changes in the cost of living. Second, check GIS if you're a lower income senior. Your marital status and income can affect eligibility and payment amounts. Third, don't overlook the Canada Groceries and Essentials Benefit. It replaced the GST/HST credit in July 2026, and eligible Canadians are generally assessed based on their tax information. Fourth, if you don't have access to dental insurance, check the Canadian Dental Care Plan and make sure you understand its eligibility and coverage rules. Fifth, if you've made qualifying accessibility renovations to your home, look into the Home Accessibility Tax Credit and keep your documentation. And sixth, if you're under 70, receiving CPP and continuing to work, understand the CPP post-retirement benefit. The biggest takeaway is this: don't assume that because you're already receiving one government benefit, you've automatically been considered for everything else. Your circumstances change, government programs change, income thresholds change, payment names change, and rules can change from one tax year to another. That's why staying informed matters. And there's one final piece of advice I want you to remember. Never make a major financial decision based solely on a YouTube video, social media post, or a headline. Use videos like this to learn what questions to ask. Then verify your individual situation with the Government of Canada, CRA, Service Canada, or a qualified professional when appropriate. If you found this video useful, subscribe to the channel for more straightforward Canadian seniors benefit information. And before you leave, take a few minutes to think about your own situation. Are you receiving CPP? Are you receiving OAS? Have you checked GIS? Have you filed your taxes? Do you have dental coverage? Have you completed accessibility renovations? And are you still working while receiving CPP? Those 6 questions alone could help you identify areas that deserve a closer look. Because in retirement, every legitimate source of support matters. Stay informed, check your benefits, keep your records up to date, and don't be afraid to ask questions. Thanks for watching, and I'll see you in the next video.